Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Stocks decline in the Asia session as investors assess the impact of weak U.S. factory activity on the Fed's path to easing rates. Israel says there will be no permanent ceasefire in the war against Hamas in Gaza until the militant group is destroyed. And oil extends losses as OPEC Plus plans to return barrels to the market earlier than expected, causing oversupply worries. Well, it's just gone 8 a.m. across the Emirates. I'm back in Dubai today. Let's get you caught up on how some of these markets fared yesterday in the session. The big focus for U.S. investors was that ISM manufacturing print, surprising to the downside, yet more evidence that the U.S. economy is beginning to slow. And of course, that's having an impact on interest rate expectations. I had a look at that this morning. The first rate cut is not priced in until November of this year now. The reaction in equities, we saw sideways trading for most of those U.S. indices, a bit of technical difficulties coming through from the New York Stock Exchange. But technical difficulties aside, we ended up around the flat line. You can see the stocks today also pointing to a flattish open. 10-year Treasury yields, massive move yesterday. We rallied around 10 basis points. We've traveled around 25 basis points in the last 3 trading sessions in UST. So quite notable there how much of a market impact this data has had on where yields are trading. Dollar, you can see slipping slightly down about 5 basis points a day. And then a lot of focus on Brent. Look, it is through $80 for the first time since February. Some reaction to OPEC Plus, that announcement coming through over the weekend that the cartel are looking to bring more barrels back onto the market. The reaction out of U.S. yesterday, not pretty, with Brent dropping more than $2-3. We'll talk more about that on the show. Also, one terminal chart I want to bring to your attention today. We are once more looking at the price action in GameStop. You can see, look, this is just a sign for how the price has evolved in the last couple of weeks, but also volumes. Take a look at those yellow bars right at the bottom. All of this with some renewed optimism of Keith Gill, so-called Roaring Kitty, coming back to the market again. Yesterday, he put up a post suggesting he had accumulated $116 million worth of the stock. And on the back of that, we saw another 21% jump in the price of the shares and where they're trading. So still a lot of excitement around this meme stock, taking us back to those days of 2021 when everyone was very excited about what GameStop and other stocks in the sector were doing. All right, let's get back to more conventional markets, though, and check in on how Asian markets are faring. Avril Hong is in our Singapore studio. Avril.
Yeah, let's talk stocks. I mean, we're seeing the Asia Pacific stock gauge declining today, and it's really interesting. The energy sector is the big loser today as we see the way Brent is trading. The other bunch of stocks that I really wanted to highlight are those in India as we see them, the biggest drag, some of them, on the MSCI Asia Pacific. I'll get to what we're seeing across assets, actually. Now I'll talk about it because this is against the backdrop of some of the early leads indicating perhaps a narrower majority for the BJP-led alliance, the Modi administration, than the exit polls might have been suggesting. So that seems to cause some concerns about policy continuity. What is this going to mean for all the infrastructure spending? Those were the bunch of stocks that really led the gains yesterday. And the Nifty, the Sensex, they're both declining almost 3%, just about erasing most of the gains from yesterday's session. We're also seeing the bonds coming off, the rupee losing ground. That is what we're watching in the Asia Pacific today. Jumana.
A bit of volatility around those Indian assets there. Avril, thank you for flagging. That was Avril Hong in Singapore. Now, turning to our top geopolitical story today, Israeli Prime Minister Benjamin Netanyahu has repeated that there will be no permanent ceasefire in the war against Hamas in Gaza until Israel's conditions are met. But he says Israel is willing to pause hostilities for the sake of hostages. President Biden last week proposed a 3-phase peace plan, which included a temporary truce and eventual permanent ceasefire. Our Middle East economics and government reporter Abir Abu Hamad joins me right now. And Abir, it became pretty evident over the weekend that within Israel, not just the Prime Minister himself, but other members of the Israeli government were not going to sign on to this Biden proposal on Friday afternoon. Where do things stand right now?
Right, Joanna. So you're absolutely right. President Biden did come up with this plan that we just heard yesterday that the Israelis said that actually not every part of that plan was publicized and some details were kept private, but the pushback is still the same. Israel is saying there will be no permanent ceasefire until Hamas is fully destroyed. Hamas, on the other hand, is saying the only way, the return of the 124 remaining hostages would happen is if a permanent ceasefire was granted. So again, it's a tale of two different sides. We don't know, where things are going to stand, but there's a lot of balls up in the air over the next week. We know that Gantz, who is part of the centrist party in Israel, is saying that we need a wider plan. We need to see what the next day post-war looks like. And he's actually threatened to leave by June 8th, which is in the next 4 days. Yeah. Could very well happen. So we don't know how that leaves Netanyahu's party or what the wider threats to that are.
Yeah, and of course, that was an ultimatum that he gave a couple of weeks ago. And of course, we're getting very close to that date now. So a lot of questions about what Benny Gantz is actually going to do. As for the PM himself, what are the next steps from here?
Right. So, he was supposed to speak in the Congress. We were talking about that. He was supposed to speak in the U.S. Congress, over the next couple of days. But there's a Jewish public holiday, so that date has been postponed indefinitely. We don't know when it's going to happen, but it's definitely, seen as a sign that Netanyahu is still welcome in the U.S. It's a big thing for him to go to the U.S. and speak to the Congress, address Congress members. So it's still, a sign that those ties are still prevalent between the United States and Israel. But as things stand right now, we know that there have been protests in Israel, 100,000 people almost protesting on Saturday. Yeah. That number is expected to accelerate even. So if it reaches numbers that we used to see in the past, 300,000 or even more, that could pose a threat to Netanyahu's governing party.
So yesterday we were speaking to analysts from the region, Kim Khattas, and I've had many conversations with other experts over the weekend, sort of trying to identify why Biden came out with this proposal so strongly, knowing that it would be very quickly rejected by Israeli officials. And some people's perspective is that what they were trying to do was to speak to the Israeli public directly. They know that there's a lot of anger on the streets. 100,000 people were out protesting over the weekend. And I just wonder if the thing that's going to trigger Israel into going down this path of a ceasefire is actually the Israeli public.
Could very well be the case, right? The numbers are accelerating. That those protests in Israel have previously posed a risk to the government. Not that long ago, about a year ago when Netanyahu came back to power, and they could very well be, the voice of the people could very well be what the U.S. is appealing to. But we're not going to know until the coming 2 weeks are going to be a big turning moment in what Israeli politics are going to look like and whether a permanent ceasefire is actually going to happen based on the people's needs.
Yeah, it looks like it. Abir, thank you so much for joining us with the latest. That was Bloomberg's Abir Abu Hamad. And let's turn our focus to commodities. Big moves yesterday. Oil is extending losses, holding near a 4-month low after OPEC Plus rolled out a plan to restore some production to the market, raising concerns about oversupply. Let's bring in Ziad Dawood, our chief emerging markets economist for Bloomberg Economics. Let me just start with the price action yesterday. I was in Riyadh monitoring the price action early morning, and up until the U.S. time zone, oil wasn't doing much. And it seems as though U.S. investors walked in, they saw the announcement, they pieced it all together, and they thought it would be very bearish for the oil market.
Yeah, what determines prices ultimately is supply and demand, and both of them have been not great for oil since it peaked in early April. If you look at supply, you had the OPEC Plus decision, which maybe took time for people to process, because on the one hand there was an extension of some cuts, on the other hand there was some easing of some cuts later this year. The net effect is there'll be more oil coming to the market by the end of the year. There's also supply from non-OPEC places. So if you think about the US, Canada, Brazil, their additional supply will absorb all the additional demand that is expected to come into the market this year. And demand hasn't been great for oil either. The IEA twice revised down its demand forecast for this year. And you mentioned the US data earlier and how they're getting weaker. And there is also the outlook for China demand for fuel has also darkened recently. So you have supply that's not great, you have demand that is weakening, and on top of this, you have geopolitics. Geopolitics lifted oil prices in April when there was an escalation between Iran and Israel. But as the tensions eased, the geopolitical risk premium has basically vanished and is now close to zero.
Yeah, something to watch for sure. And we're going to definitely keep an eye on what the price of oil is doing. Ziad, I also want to bring up Egypt because I know you've been following all of the developments there very closely. Couple of developments. One of them is political, which is that the President Sisi has tasked the Prime Minister with reforming government with the aim of putting together a government that is going to be a lot more focused on the structural reforms that the government is trying to push through, or the President wants to push through. How do you see that impact at a macroeconomic level?
I have to say it's limited. The big decisions in Egypt, as far as the economy is concerned, the structural ones, the ones that are related to the role of the army in the economy, the investment in infrastructure that's taking place in the country, whether it's viable or not, even stuff like the flexibility or not of the exchange rate. These are not decisions that are made by technocrats or people at the central bank. These are political decisions that are made by the president himself. So a change in personnel in cabinet will probably not do much in terms of changing the outlook for Egypt. And we've seen it before. When Egypt changed central bank governor, that didn't lead to an immediate change in the exchange rate policy, which is the most technical of these decisions. It took a while, and that was a political decision in the end.
Now, you put out a story on Friday saying that Egypt are raising the price of subsidized bread. I think this is the first time they've done it in over 30, 40 years. And the last time they tried to raise the price of bread was met with huge riots, and the then government had to back down. What's different today?
What is different today? Well, that story was put by our reporters, obviously, there in Egypt. And Egypt has quadrupled the price of subsidized bread. What is different today is there's $57 billion that have come into Egypt. And that has been a game changer for Egypt. It allowed it to ease the dollar shortages. It may even allow it to basically offset the increase in the price of bread with cash handouts. Let's see if that's going to happen. But I think when you have $57 billion coming into the country, that will help you maybe cushion the blow to consumers.
But inflation is still running at 30%. And so how do they square up the desire to bring inflation down with removing the subsidies on one of their core goods that people consume?
Of course, I mean, economics is all about trade-offs, right? So on the one hand, if you raise the price of subsidized bread, that would raise inflation. But on the other hand, one of the problems of Egypt is they run a large budget deficit. And having subsidized bread at low prices, especially in an environment where they import wheat in dollars and the exchange rate has actually depreciated significantly, that increases the cost for the government. So that also increases the budgetary burden of the government. So they clearly went for the fiscal decision at the expense of potentially increasing inflation.
So the fiscal decision potentially also at the expense of the political decision. So let's see how it pans out. Ziad, thank you so much for the overview on what's been happening in commodities, but also the latest developments in Egypt as well. Well, still ahead on the show, we speak to the Dubai Aerospace Enterprise CEO about aviation supply chain snarles and the lack of new jets. But first, hear why Commercial Bank of Dubai thinks the Fed is sowing the seeds for the next financial crisis. We get their market outlook next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersechi in Dubai. Well, Asian stocks are struggling to gain traction as investors weigh concerns about the health of the U.S. economy against stronger expectations for early Fed policy easing. Let's bring in Deepak Mehra, the chief economist at the Commercial Bank of Dubai. Good morning to you. Well, another piece of data that came out yesterday, the ISM manufacturing disappointing to the downside, another sign that the U.S. economy is beginning to slow down. How do you think this translates, if at all, to the Fed's decision making?
Yeah, thank you very much, Jemana. Good morning. I think it's not the only piece of data. If you remember, the GDP and the PCE data last week both showed weakness in the consumer. Not only that, the earnings reports from many consumer companies are showing that the consumer, especially on the lower end, is now dropping off. So I think we are heading for a dramatic slowdown. The headline data doesn't show it. The rich probably are getting richer because they have savings and they're being paid huge interest rates on their savings. So they continue to spend. But the bottom half, 50% of the population, probably has run out of its excess savings and is worse off compared to pre-COVID days.
So the first rate cut, I should say, is not priced in until November. You think they should go sooner? What are the implications for financial assets if rates stay higher for too long?
I think if rates stay higher for too long, the Fed is sowing the seeds for the next financial crisis. This financial crisis could be very deep. If they hold on cutting rates for too long, waiting for that 2% to be achieved, we could be pushing the economy into a deep recession. There could be cracks appearing in other areas as well. So at that stage, the Fed will be left with no option but to go for aggressive rate cuts and maybe quantitative easing once again.
Right. So that's the ultimate end game. But the credit backdrop is still so far pretty favorable. You look at credit spreads at extreme tights. Of course, that tells you about what the market is thinking about, the investment outlook.
Yes.
Default rates have been low. Delinquencies are beginning to go up, but still there aren't a lot of signs beneath the surface that there's trouble brewing.
I think, again, it's hiding the fact that the lower-end companies, the small, medium enterprises, are already facing the brunt of high interest rates. You can see how the layoffs are increasing, especially in the permanent jobs. You can see the hiring intention for small businesses. That has dropped off. It is showing negative in the next 3 to 4 months. So I think it's, again, the top-end consumer, the top-end companies are hogging the limelight, pushing the numbers, making the headlines look good. But I think at the bottom end and inside, you lift the hood, it's not looking very good.
Okay, well, team hard landing for sure.
Yes.
Deepak, let me turn your attention to one of the other developments we've been watching overnight. A lot of volatility in the Nifty and these Indian assets responding to the elections as the results come through. What do you make of this negative price action we're seeing in the Nifty this morning, and what does that tell you about investors' expectations about what the BJP can do?
Yeah, I think the investors obviously expect BJP to come back to power. I think that is not in question. The question is how many seats can they gather? And they were looking at a super majority, a landslide. And that somehow doesn't seem to be in the initial vote counting that we are seeing right now. And that is why Nifty is reacting to it. It's very important for the ruling party to get that super majority for them to go for the next round of reforms. And I think the market supports it and market wants it. So if they don't see it, that's where I think we have a bit of a problem.
Hence the pullback, as we can see on our screens right now. Well, would love to further the conversation. We're going to have to leave it here for now. But thank you for coming on. A good friend of the show, Deepak Mehra, chief economist at Commercial Bank of Dubai. Thank you. And also coming up, we're going to talk more about that India's official count of some 640 million votes is now underway. We are going to be live in New Delhi next. This is Horizons Middle East and Africa. Welcome back to Horizons Middle East and Africa. I'm Jemana Bersachi in Dubai. Indian stocks reversed gains that had pushed key indexes to record highs as euphoria around exit polls that predicted a landslide third time for Prime Minister Narendra Modi waned. Now, Bloomberg Markets Asia anchor Haslinda Amin joins us live from New Delhi. Haslinda, as these exit numbers begin to come through, it's becoming apparent that the BJP majority is getting narrower and narrower. The market reaction hasn't been so positive. What more do we know?
Well, the thing is, it is a fast-changing picture here as the vote count gets into its third hour. We kicked off the vote count with, Narendra Modi and his allies having a major lead, especially on the back of gaining 92 seats on the back of those postal votes. But as the day went on, that lead, as you said, is shrinking. In fact, this is where we are right now. BJP and its allies with 210, and the opposition parties and its allies currently at 124. That lead is not as much as people had anticipated. Remember that exit polls had suggested that the BJP and its allies would garner at least 350, and Modi himself is looking at a supermajority of 400. That seems pretty unlikely if that lead stays where it is at this point in time, and hence we're seeing that reaction in the market. Nifty currently down. In fact, it was down as much as 2.9% after surging by about 3.3% yesterday, which was the biggest increase in about 3 years. Now remember that markets itself have factored in a super majority win for Modi. It will be disappointed if it doesn't see that 400 that Modi is expecting. So, Jumana, early days possibly, but it is fast changing here at this point in time in terms of the vote count in India.
Well, I think both the investment community and Modi himself obviously were looking for this supermajority. What has been working in his favor? What are the elements of the campaign that have resonated with people or even not resonated with people as we're getting from these preliminary results?
Well, what has worked is Modi himself. People talk about the Modi cult. We talk about, the Modi effect. This is a man who has pretty much driven the economy to 8%, which is the fastest growing economy among the G20 nations. And during the campaign period, even at 72 years old, he crisscrossed the country trying to sway the opinions of the voters, including in states which have traditionally voted for the opposition. The Modi effect is front and center. He is the most popular leader that the country has seen. Modi has talked about his vision of wanting India to be a middle-class economy by 2047. And he has talked about how he will not die till he gets there. So that is the determination that has been shown by this man. So what has worked? It is Modi's policy. It is the investment he's put into the country in terms of infrastructure development. And over the next 2 years, we're about to see about $500 billion poured into infrastructure spending. So it is the Modi effect that's worked for the country.
Fascinating. Has, thank you so much for all of your coverage out of India, and we'll be speaking to you later on this week as well. Bloomberg Markets Asia anchor Haslinda Amin. And a quick look at other markets. We're just talking about the reaction in Indian assets, but over here you can see S&P futures leaning sideways, European futures similar as well. We'll have a lot more on the show when we come back. Aviation executives are voicing concerns over supply chain snarls. We're going to be speaking to the Dubai Aerospace Enterprise CEO next. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Stocks decline in the Asia session as investors assess the impact of weak U.S. factory activity on the Fed's path to easing rates. Israel says there will be no permanent ceasefire in the war against Hamas in Gaza until the militant group is destroyed. And oil extends losses as OPEC Plus plans to return barrels to the market earlier than expected, causing oversupply worries. It's just gone 8:30 a.m. across the Emirates. I'm Jumana Bersachi, back in Dubai today after my trip to Riyadh yesterday to talk about some of those oil dynamics, in addition to the Aramco roadshow, which is ongoing this week. So something to bear in the back of your minds as the course of the week progresses. But for now, let's get a quick check on how some of these key markets have reacted. We had the weaker than expected ISM manufacturing number come out yesterday. That propelled a bit of a risk-off sentiment in the markets. We saw some of those equities decline towards the close. But most notably, we saw a massive rally in 10-year yields, 10 basis points throughout the course of the day yesterday, sitting at 4.4 now. We have rallied 25 basis points in the last 3 trading sessions as the market starts to factor in some of the weakness of the data that's coming through. The dollar index, you can see DXY slightly weaker today to the tune of about 8 basis points. And then Brent slipping through $80 yesterday late in the afternoon as the U.S. investment community walked in. This is the first time Brent has broken through $80 to the downside since February. So a lot of weakness beginning to come through on the energy complex. And the primary catalyst, so per the market, was that OPEC Plus announcement over the weekend that they're bringing more barrels to the market sooner than they had anticipated. As for our terminal chart today, well, we are back looking at meme stocks again. GameStop back in focus. Yesterday, we saw a 21% jump in the price of GameStop. This after Keith Gill, who was the sort of poster child of the meme stock mania back in 2021, posted an image suggesting that he had purchased about $116 million worth of stock in GameStop. That got the retail community excited once more. You can see those yellow charts, those yellow bars at the bottom are reflective of how much volume is going through on that stock. So quite a lot of excitement around GameStop once more. All right, let's also check in on how markets in Asia are faring. Avril Hong is in our Singapore studio. We've been tracking some of the movement in Indian assets today. So what is the latest there, Avril?
Absolutely, Jumana. I mean, yesterday we saw a rally across assets, stocks, bonds, currencies in India after those exit polls suggested that landslide victory for Modi, allowing him potentially to push through with his policy agenda. But now we're getting those early voting counts that seems to suggest a slimmer majority, and the tail is really turning. We're seeing the Nifty erasing much of the gains from yesterday. Remember, these are the stock gauges that hit record highs yesterday. We're seeing it come off on India bonds as well as the rupee. So that is what we're watching in the Indian markets. Let's flip the board and take a look at what we're seeing elsewhere in the region, because following on from that weak U.S. factory activity data, it looks like those recession fears are coming to the fore. And for once, bad news for economy is bad news for markets. Declines on the Nikkei and the Kospi. The Chinese equities seem to be doing their own thing. We're seeing energy sector, the big loser in the Asia Pacific stock index, keeping an eye on dollar yen as well. Today, for the first time since intervening in late April, early May, the finance chief of the country finally acknowledging, yes, we stepped into the markets, and he said that it was effective to some extent. Jumana.
Excellent. Avril, thank you so much for giving us the latest. Avril Hong in Singapore. Now, airline executives gathering at IATA's annual meeting in Dubai are voicing concerns over the lack of new jets and supply chain snarls.
Demand environment, I think, remains quite robust. It's recovering slower than we had expected, principally because of the Chinese market in terms of international travel to and from China. But I think that's a timing issue, not a plateau.
We're blessed to be in a region that is growing a lot. GCC is growing a lot. I mean, Saudi Arabia is growing a lot. The UAE is growing a lot. India is growing a lot. It's just 3 hours flight, right? Yep. So it's sustainable.
Right now, in terms of engines, we do not have that problem, which the peers or the industry is facing. In terms of aircraft delivery, of course, we face some delays, but which are manageable, I have to say. I mean, It's like several weeks for that.
In the supply chain, we are having trouble sourcing parts for interior cabins, for engines, that type of thing.
We're experiencing more severe turbulence, and we haven't had a significant incident yet, but we are taking all the precautions we need to keep the safety of our customers and our crew to the maximum.
Well, Guy Johnson was very busy at IATA the last couple of days talking through some of the major themes, the supply chain snarls, in addition to the increasing frequency of turbulence on some of these flights. Joining us now is Firoz Tarapore, the CEO of Dubai Aerospace Enterprise, which is a global leasing company. Good morning to you. Thanks for joining me on set.
Good morning.
Let me just start off by asking you, what is keeping you busy? Which are the biggest or the most thriving geographies right now?
I think the good thing for us is that we're seeing demand strong across all regions, some kind of more than others. And as we just heard, China International is yet to recover, but that I think is also, as we just heard, more of a timing issue than anything else. The great thing is that people either need to or want to travel, and that is holding up numbers really quite well for our business.
And looking ahead, is it still sale and leaseback that's constituting future demand, or are people also interested in the new aircraft that's potentially coming online?
I think for us, it's all of it. So clients need sale-leaseback solutions. More and more clients today are looking for finance leases, so we can do both operating and finance. And of course, a lot of lessors have positions where both the OEMs are sold out, and those positions are things that we can offer to our clients. So I think the demand is quite robust across all airlines, across all aircraft types.
And yet, rental leases have been going up if you talk about pricing, and I wonder what the ramifications are for that on some of your customers. Are they changing the way they behave? Are they looking to perhaps lean on more older generation aircraft because of this pricing increase?
Yeah, so it's all linked, right? So in the last 3 years, according to our estimate, about 3,000 planes that otherwise would have been produced were not produced. And as a result of that, people are holding on to their older equipment because demand is still very strong. And as that happens, we see pricing going up on the valuation of the assets, on the lease rentals that airlines have to pay. Airlines are in a very decent position in that, yes, they are paying more, not just for leases, but for staff increases and supply chain and all the other things that they're going through. But they're making more than all of that in the fares that they're able to pass through to the market. So we have this amazing confluence where airlines are making a lot of money, and the ecosystem around that is also quite profitable.
Yeah, so it helps. It's interesting. I saw in an interview yesterday, Tim Clark was saying one thing he knows for sure is that prices are going to continue to rise. So that sort of backs up what you were saying. I see you do have a lot of Boeings in your portfolio. What is your level of concern about the quality and the safety of the planes?
Yeah, so ultimately, safety is not an issue because Boeing is kind of gearing down to make sure that everything that comes out is absolutely safe. And that's paramount, I think, to them, to everybody, right? And regulators are all over it. I think from our perspective, Boeing is in a unique situation where these incidents that have happened have damaged their credibility to such an extent that it's taking them a lot longer to come back. And we hope that they get their act together in a very measured way, but also in a very accommodative way to the marketplace so that they can do what they need to do, but they can also restore the credibility that they need to
Do you see the delivery delays from Boeing an opportunity potentially for a company like yours?
Not really. I mean, we are a big Boeing customer. We have a multi-billion-dollar order with them. So we hope, of course, that they get everything right. I think for us, getting the right product out of Boeing at the right time is very important. And we wish them well as they continue to kind of put out many fires at the same time.
What about the geopolitical situation in the region right now? We covered a lot on our show, and I wonder if that's had a tangible impact on your day-to-day activity.
You know, surprisingly very little. So we have 2 geopolitical conflicts going on in the world right now. And one would have expected that had a bigger impact on aviation. We were braced for it, but we didn't see it. So short of some very local incidents of people not flying to a particular location, we're not seeing any impact on the airline side or even on our side. It's been remarkably good.
So one word to describe the outlook then for the rest of this year?
Strong.
Okay. That's a good place to leave it. Thank you so much. That was Firoz Tarapore, the Dubai Aerospace Enterprise CEO. Thank you for joining us today on the show. Also coming up, our interview with the Ford CEO, Jim Farley, about competing with China on EV development. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Now for a look at some of the other stories we're following this morning. Turkey's inflation accelerated more than forecast last month, reaching an annual rate of 75.5%. Monthly price growth, the central bank's preferred gauge, also quickened and hit 3.4%. Officials are hoping that May's result is the cyclical peak and are aiming to have inflation slow by year-end to 38%. And a glitch during a software update led the NYSE to wrongly halt trading on about 40 stocks and display odd trades, which included a 99% drop in Warren Buffett's Berkshire Hathaway. The disruption is the third to hit U.S. markets in the past week. The exchange reverted to backup data to resolve the issue and says it will cancel the bad trades. And Toyota shares are falling after government authorities raided its headquarters. It follows the Transport Ministry saying Toyota was amongst 5 car makers, including Honda and Mazda, found to have falsified or manipulated safety data while applying the certification. The automaker announced a day earlier it was suspending sales and deliveries of 3 models. And the architect of the Brexit campaign says he will stand as a candidate in the UK election, a move which could split support for the Conservative Party. It will be Nigel Farage's 8th attempt to win a parliamentary seat, this time running as a Reform Party candidate in the coastal town of Clacton. Prime Minister Rishi Sunak and Labour leader Keir Starmer are set to face off in a debate this Tuesday night. And Ford says it is just 2 years away from offering technology that will allow drivers to take their eyes off the roads. The CEO, Jim Farley, told us that the U.S. can be competitive with the world's biggest EV maker, China, and has the capacity to beat them.
The most basic for an industrial company is to be fully competitive on cost with the best in the world. And today for EVs, that's China. So we have to be we have to be fully competitive, but then and be fully competitive on quality. That's the ticket of entry. And that is not something that we should assume just happens. It's hard, but the real exciting part will be the innovation on top of a competitive cost base and quality base, bringing the customer things that they didn't expect, like Pro Power on board, exportable power, so you can run your house 6 days with your F-150, and those kind of innovations are really going to make the difference for us.
What about China? China is a force in the world economically, and apparently increasingly in the electric vehicle space. How vigorous a competitor are they? How vigorous a competitor should they be to you in the United States?
I've been doing this for 40 years. I worked for Toyota for a couple decades. I've never seen a competition like this. They have full sponsorship of their government. The government bet on EVs before anyone else in the world. They are the largest market in the world, and now they're the most important market in the world. We can compete and win against them, but we have to bring our A game, and we have to learn a lot of new things. This will be the ultimate test of companies like Ford for the next 100 years. And I'm fully competitive. I fully believe we can do it. Ironically, it's a small skunkworks team in California that's designing an affordable electric platform to take on the BYDs of the world globally. It's a very American underdog kind of story about the skunkworks team. Many of them left Tesla to come to Ford and Apple. And I think we have as good a shot as anyone. They have a local market of 29 million vehicles. The U.S. is 16 to 18, and they have installed manufacturing capacity of 53 million vehicles. In fact, they could fill the entire U.S. market on top of their local market and still not have to build one more factory. So they have a lot of manufacturing capability, and we have to be better than them.
The Chinese automotive industry also has the support of their government, as you suggested.
Yes, they do.
That brings up the question of tariffs.
Yes.
We certainly have very extensive tariffs being proposed in the United States.
Yes.
It's not just the United States. It's also being talked about in Europe and Brazil, places like that. Are you in favor of that or not? Because on the one hand, I guess it levels the playing field. On the other hand, there must be a risk that actually protects you from innovation and competition.
What a great question. You know, for me as a CEO and for my leadership team, we just want a level playing field, whatever that is. But it goes far beyond tariffs. You know, in China, these are digital vehicles. They're also autonomous. They can crash into things. They can collect a lot of data. So for privacy, for national security, our country leaders need to have policies that are similar or reciprocal to the Chinese policies that we face as an American company competing in China. And, you know, so that level playing field is really important, but it's really the beginning. There are a lot of other policies that the government has to put in place around data privacy and others that I mentioned that also have to be put in place. But ultimately, in the end of the day as a CEO, I have to be completely competitive on quality and cost to their quality and cost. Take out all the subsidies, all the tariffs. We have to be fully competitive. I went to Toyota. We had the chicken tax that protected the U.S. makers on trucks. And we became the best-selling car with Camry because we had a better car.
That was Ford Motor President and CEO Jim Farley speaking to Bloomberg's David Weston. Also coming up, Bloomberg has learned Russia is pursuing uranium assets in Niger. We'll have this story for you next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Now, Bloomberg understands that Russia is seeking to take over uranium assets in Niger, currently held by a state-controlled French company. State-owned Rosatom is said to have had contact with military-led authorities as Russia looks to expand its presence in West Africa. Fascinating story. Let's bring in Bloomberg's Ondiro Ganga, who's in Kigali. Ondiro, Russia appears to be moving into acquiring assets in Africa. What do we know about this particular case?
Jumana, what we know so far is that Rosatom is in conversations with the military-led government in Niger to acquire assets owned by Orano, which is a French-backed a company. And the conversation currently is around mining permits, but it's still at the very onset, so it's not clear what assets they're targeting, and the terms of transfer are yet to be laid out. Orano, on the other hand, is a company that has majority shareholding in several other companies that do underground mining, pit mining, and other uranium projects in Niger. And it really makes sense why Russia is interested. However, Orano says that they have been in contact with the military government in Niger, and they're not aware of any talks of transfer of assets. And this code of conduct, code of silence, cuts across France, it cuts across Kremlin, and also Niger. But where it gets interesting is that the International Atomic Agency says that it's aware of a potential transfer of uranium assets. And this all began when there was a military coup in Niger, and the military government is leaning more and more towards Russia, which is paving way for them to express interest in areas such as mining assets and try and rebuild that Soviet-era influence in Africa.
I mean, it feels like something that we should be watching very closely, particularly because as some of these European countries withdraw for whatever reason from African nations, it presents opportunities precisely to the likes of Russia. How much could this situation actually impact what happens with some of these European markets and countries who typically would have had a presence in the African continent?
Jumana, there's likely to be an impact because if you look at Niger, in 2022, it accounted for 4% of global uranium production. If we put France into focus, they got 15% of their uranium supply from Niger, and this was used to power reactors that account for 65% of their electricity. If you look at EU as a region, Niger accounts for a quarter, percent of about 25% of their uranium supply. And so this really gets interesting because they really depend on Niger. Prices of uranium have also risen because of the fact that imports were halted after the military took over power. And so this puts Russia at a really advantageous position because if you look at also global politics, the US and their allies would want to import from aligned countries, Russia and China likewise. The problem is that the US and their allies do not have domestic production, which puts Russia at an advantage.
Very interesting. Thank you for bringing us that report. That was Bloomberg's Ondiro Ganga, who is in Kigali. And do not miss Bloomberg's monthly deep dive into the world of Africa's political and economic landscape. On Africa Amplified this Friday, South Africa's election will be in focus as we speak exclusively to the economist and political analyst Moletsi Mbeki. All right, let's get you caught up again on how some of these equity markets are faring. And here you can see that the picture is pretty muted for, well, U.S. equities in addition to those European futures, which are seen opening slightly weaker, marginally so, about 6 basis points. It is a big week in Europe this week. The ECB meeting coming up on Thursday. Interesting article out on Bloomberg a short while ago saying that while the market is centering on an interest rate cut penciled in for this Thursday, after that, a lot more division about how many subsequent rate cuts will follow up after that, simply because there's still some inflationary pressures emerging. So something to bear in mind into the rest of the European week. As for other financial indicators, let's just take a quick look at how U.S. Treasuries are faring. Huge move over the last couple of days. Yesterday, we rallied 10 basis points, but down about 25 basis points over the course of the last 3 trading days. Today, you can see 10 years are sitting at 4.40, 2-year sitting at 4.82, so firmly broken through 5% here as the market starts to ask questions about the state of the U.S. economy, but then also the timing of that first rate cut. I checked this morning. It's fully priced for November of this year. And then finally, I just want to end on oil. We were in Riyadh yesterday dissecting the impact of the OPEC Plus announcement. Well, it was bearish. Yesterday, we saw Brent break through $80 to the downside, now sitting at that, very symmetric number, 77, down another 0.75%. But ultimately, the reaction from the market has been negative to OPEC. And that is our show today, Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.